Well, good morning, and thank you for coming. I'm going to back up, and I'm going to take a view on the subject from the point of view not of green finance, not of green finance, but of what's in between. Green finance is sourcing and application of funds, but what's in between, which is the accounting. There we go. I'll put it in my pocket. Okay. Closer. Sorry. What I'd like to do is start by looking at the scale, the scope, and the description of green finance. There are three basic documents which are very useful for people to look at. The first one is the PBOC's first report on a green financial system, and that was published in April 2015. The second one was the G20 document, which was in July 2016. And the third document is the PBOC's second report on a green financial system, was it done in September 2016. These are the three main background documents that give you the scale, scope, and description of green finance. From these reports, I could have taken many examples, but I'm taking 3 points now. The first one is that Ma Jun, the then chief economist of the PBOC, estimated that total investment needed to clean up China's environment and meet its commitment of achieving peak carbon emissions by 2030 was 3 trillion yuan per annum, every year from now to 2030. That's the equivalent to 4% of nominal GDP. Furthermore, the second point is that 85% of this expenditure will come from non-government resources. Only 15% will come from the government. And the third point is that green finance requires efforts to internalize environmental externalities, which Professor Fu brought up earlier on. So the question is, how do you mobilize such a huge sum without the government paying for it? And part of the answer lies in how you choose to define green accounting. As I said, it's not about sourcing and applying funds. It's about, with the choice of green finance scope that China has chosen is very, very broad. Now, the accounting principles that they've designed are to mobilize and direct capital to achieve defined environmental objectives. And they do this by tilting the playing field to positively reward good environmental practice and to penalize subperformance. I'm going to take for the example for this of the National Carbon Emission Trading Scheme. This was announced in December 2017. It did not, when the announcement came, it was not complete because there's a lot of detail that has to be added in. China has 7 regional pilot carbon markets, and the carbon trading scheme was intended to cover 8 sectors, and then it was reduced to 3 sectors, and now it's only reduced to 1 sector, which is the power generation sector, at the launch of the national market, which will occur towards the end of this year. And this narrower focus evidences the problems that they're finding in putting together the baselines for each operator. But it should be said that the amount of emissions just in this one sector is huge. It's more than 3 times the complete amount of emissions accounted for in the EU ETS scheme in Europe. So that's without adding in the other 7. So the carbon emission trading scheme is going to be very important. The following I'm going to give is a synopsis of the accounting standards based upon what is currently known. More will be announced as we go forward. Since 2005, China has rewarded improvements in emissions efficiency by awarding certified carbon emission rights, CCERs. These are property rights, and they're rewarded by efficiency gains which are achieved after the event. Under the carbon trading scheme that's going to be coming in, people are going to be given emission rights before combustion, ex-ante combustion. And this means that this is a new class of property rights that haven't been previously distributed. And they give the owners of the rights the ability to undertake bulk combustion, such as at a power station. The government is trying to create a unified carbon price. The 7 pilot schemes have different carbon prices. They're trying to create a unified scheme. In 2016, the NDRC said that they were going to price carbon at $30 a ton, aim to price carbon at $30 a ton in 2020, and then they were going to aim to create a carbon price of 100 yuan per ton in 2030. So they're going to be guiding the market price up by quite a considerable amount over the next decade. Now, what's different is that they're going to create a capital value for those carbon rights, emission rights that I said. You've got to multiply the number of ERs by the price in the market. And this capital value will be included into the company balance sheets. Initially, that will appear that they've had a big increase in their asset valuations. But with this capital creation comes obligations. ERs will be treated as assets. As such, they can be used as collateral for loans. And the loans can then be used to pay for the capex to get the efficiency gains that are needed. But the power generators will be required to reduce emissions, and that target is going to be set annually. The difference between the European scheme is that they change the targets once every 5 years. In China, they're going to change it every year, and it's going to be sensitive to what has been achieved in the market. It's not going to be a sort of a straight line thing, it's going to be variable. And as each year passes, regardless of whether you as a power generator have met your target, so the number of ERs will be reduced. The accounting consequences of achieving and underachieving are obvious. If you are achieving, you will have very positive profit performance. If you're not achieving, the worst case is that you'll go out of business. Thus, the accounting system is asymmetric, and they can set the proportion of asymmetry to be able to reward outperformance and underperformance as they wish. Now, the perceived outcomes of green accounting is that at this moment it's a cutting-edge form of accounting. No other nation in the world is following this type. It's about the internalization of externalities, as I said at the front. China is seeking to enforce environmental discipline through the overlaying of environment over finance. There are two disciplines. You've got environmental discipline, you've got financial discipline. They are discrete elsewhere. They are going to create, overlay financial discipline, environmental discipline over financial discipline. And the consequence of that is that the maximization of profit going forward, once this is fully implemented, can only be achieved through the maximization of environmental performance. I repeat, this is the key point. The maximization of profit can only be achieved through the maximization of environmental performance going forward in China. And the consequence of that statement is that companies will be obliged to use their non-government capital to apply it to emissions reductions. This is a huge opportunity for Hong Kong. We're going to need a whole army of measurers and validators. We're going to need a completely new audit system to be able to cope with this overlay of the environment over the financial system. This is going to place demands on the training institutes. Solutions providers, so the engineering companies, the energy efficiency experts, a whole raft of people are going to be the people who are going to devise the solutions. Professor Fu said there's going to be a huge number of solutions needed. Jim said the same. There's a huge number of solutions that are going to be needed. It's going to require changes in our financial understanding. The whole universe of the financial sector, they're going to have to prepare for this change in accounting statements and accounting standards, and they're going to need to be able to explain these, if we are to be able to source the funds from outside China and apply them into China. Because if people don't understand what they're investing into in terms of accounting, they will think it's too much risk, let's just walk away from it. And then comes the issue of valuation. How do you value a company on the basis of environmental performance? We don't have any metrics yet how to do that, but we're going to have to learn how to incorporate that into our thinking. So Hong Kong has the opportunity to act as the intermediary which gives overseas investors the confidence to invest into China, particularly in respect to the GBA, because that's our hinterland. And the GBA is going to be important because this is going to be, quote, the Silicon Valley of China, the innovative center of China. So therefore, we're going to be faced with being innovative, all right? And lastly, we just need to be able to explain ourselves, all right? Thank you very much.